Market participants remain concerned that major central banks will keep interest rates high for quite a long time. After all, this threatens economic growth, given rise to fears of a significant decline in energy consumption. In the event of a recession, production and consumption will inevitably decrease. According to the trading chart, the oil prices pulled back to the level of $93 per barrel, although the asset is deep in overbought territory and its correction is long overdue, and this decline is likely to be short-lived. Brent crude is expected to get stuck in a sideways range of $92 to $94 per barrel. Moreover, the two largest oil exporters, Saudi Arabia and Russia, are not eager to increase crude supplies, which limits the downside potential of oil prices. A full-fledged correction is possible only if the quote falls below $92 per barrel and then hits toward the 90 mark. Speaking of a major central bank's monetary policy, ECB President Christine Lagarde hinted at a possible interest rate cuts yesterday. Against this backdrop, gold prices fell to nearly $1,910 per troy ounce, and this is largely due to the inverse correlation between the dollar and gold. However, given that the US currency is extremely overbought and the market needs a correction, and the yellow metal is unlikely to dip to $1,900 per troy ounce and below, the most likely scenario suggests a rebound followed by a return above the level of $1,920 per troy ounce. Now let's move on the ruble. The dollar continues to trade at around 96 rubles with no attempts to edge higher. At the same time, there are regular breakouts of the 95 mark, and this indicates that the ruble is strongly oversold. Thus, the market is looking for a reason to enter correction, but so far unsuccessfully. The market situation is likely to remain unchanged until tomorrow, when a batch of macroeconomic data is set to be released. However, judging by downbeat forecast, statistics will only take the greenback deeper into overbought territory. From a technical point of view, the dollar will extend gains if the quote consolidates above 97.50. A bear case scenario is possible in a case the price fixes below the 95 mark. Meanwhile, the stock market is standing still in anticipation of tomorrow's macroeconomic data, which may well drag the index below 3,000 points. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.